All right, let's talk airlines because they've been in the news this week, as you know, because of Delta. Well, now United Airlines gets the price target lowered to $110 from $125. That's at Bank of America. Price target also down at Barclays to $140 from $150. This is looking at the worst week now since August of 24 for United. American Airlines price target trimmed at Bank of America. You're looking at the worst week since May of 24 for American Airlines. And again, Delta really started this with that dour outlook, and that stock is having its worst week since March of 2022. Joe owns United. Joe owns Delta. Joe owns this segment.
I do.
You own it.
Scott, I want to be clear about something because I had someone yesterday after our airline conversation call me up and said, you know, you sounded pretty bearish about Delta when you were speaking with Steve and Jimmy, and you own these positions. You're on CNBC. Why are you not defending the positions in a publicly traded fund? And the reason I'm not doing that is I'm going to be transparent. There's a quarterly rebalance in which these stocks could go out. So I am going to tell you, I agree with every one of these price cuts because I think the positive momentum in the airlines has been lost. It was great while it was there. We enjoyed it. In terms of the fundamentals, there's now a clear and present challenge to revenue growth. You're talking about lower fares, and you're talking about a potential fare war. Demand is beginning to wane. So I'm going to be transparent on that. Look, I wanted a publicly traded fund so people could see my performance. And if I'm going to do that, then I'm going to be transparent about what I see in front of me. I'm going to call balls and strikes. Yes, we own it. We can't do anything about it right now, but these stocks don't look good.
Okay. Thank you for that. No one else owns any of these names.
No,
So
but the good news is Jimmy will be there to buy them from you.
He might. He might. He was defending Delta yesterday. All right. We mentioned a shopping list for this pullback. RBC has one today. ServiceNow, IBM, Iron Mountain. They named those as stocks to buy on durable sales growth. I think the sell-off is overdone in those names. Rob, you own IBM.
Yeah, we've owned it for a while. We bought it in May. It's up about 56% versus the market up 9%. Feels like it's a little more fully valued right here, seeing modest revenue growth, margin expansion. Now it's, though, from a price standpoint, more in line with the software peers. I do think long-term they're a beneficiary of continued IT spend and kind of AI initiatives that companies are taking. So it's a solid company. I don't know if it's a screaming buy that it once was, but we're going to continue to own it.
What about Abbvie? Target goes to 195 from 165 at Berenberg, which you own.
Coincidentally, we added it on the same day. Now, this is a stock that's a little cheaper, industry-leading profitability. They have a great drug pipeline focused on some hot areas like Botox, arthritis, and high-quality characteristics. And it's on pace to produce low double-digit earnings growth consistently. So we'll probably like this a little more here.
Let's do something real quick on Uber, which was reiterated by today, which Weiss you recently sold, and Joe you continue to own. You guys have a view on this call. Is it a buy here, or did Weiss make the right move and get rid of it in a place where, well, you own it personally or in the ETF?
I own it personally.
Okay, so you actually can be tactical in it.
I can be tactical in it. Look, to me, the stock seems range-bound between 60 and 80. I had sold it out previously at around 74. Stocks went down to the low 60s. Bill Baruch made a great buy down there, by the way. Now the stock has recovered. After Bill Ackman got in, I told myself, look, I believe in this company over the long term. I'm going to establish a position. I'm going to forget about it, put it away, because I do think this is a $100 stock. I do think this is a victim of the overall market environment itself. That's one of the reasons it's not idiosyncratic. It's the market.
Okay.